All right, good afternoon, everybody. It is Tuesday afternoon at 2 p.m. on August 18th.
Broadcasting live from the financial district of Chicago, Illinois, your home of market quotes and anecdotes. Here's your host of Trader Audio, Darth Trader himself, Jim Zarosli.
Coming back in on a swing trader. How you doing, Chris?
Take it away.
Pretty good, Gavin. Pretty good. Trying to work off this jet lag. Got back on Saturday, but doing good. Getting back. It feels good getting back into a routine and just trying to get back into the groove of things.
Nice. You were out in Greece, right?
Yeah. So we went for my cousin's wedding, and we stayed in a coastal city right outside of Athens, about 45 minutes away from Athens. So did that for a few days, wedding festivities, and then my wife and I went to Athens, kind of explored that area for a few days, and then went over to Austria and went to Vienna, some of the countryside cities, and ended off in Salzburg. So
Very nice.
from there, beautiful countryside, beautiful place overall, both Greece and both Greece and Austria. But the heat was the downside. Heat was
I
crazy.
meant to ask you about that. So yeah, I mean, I had a buddy of mine who went over to the UK a couple of months ago and was talking about the heat down there.
Yeah,
No air conditioning, obviously, right?
they don't believe in it.
Yeah, they might start to find religion, right?
They have it. They have it in like within the hotels and the Airbnbs. They have it, but it's a fan on the wall, so it's a little. It's not like our central AC over here for sure,
Yeah,
and especially
they've got a lot of the what is it? Those Mitsubishi
yeah,
air conditionings too,
yeah.
right? The Japanese ones.
Yeah, exactly, and especially if you're sleeping and that thing's blowing on you, it's it gets pretty uncomfortable, at least for me.
Yeah, yeah, I could imagine. So, but well, it sounds like it was a great trip at least anyway. Anything on the economy or anything of interest that you kind of picked up while over there that jumped out to you?
No, nothing that jumped out particularly. I went and I visited the stock exchanges in both countries, in Greece and in Austria. I actually went into the Vienna Stock Exchange did have their doors open, so I was able to poke in inside and get a couple magazines off of the desk over there. They gave me a couple pens as well, but since everything is electronic, there's really nothing to see. Took a couple pictures, but it was
Yeah.
cool. It was cool seeing it. Every time I travel, I always try to find these different stock exchanges and at least go get a picture outside if the doors aren't open.
Did you get to the Opera House in Vienna? Isn't that supposed to be like the nicest opera house in the world or something?
We went to a couple of them. We went to a couple of them. We did go to one in Salzburg. We actually saw a concert over there. It's where Mozart used to play, which was really nice. It was beautiful. It was within a palace over there. But the opera houses, yeah, we went to a couple of them. They're very big on their cafes as well. Very, I might be butchering it, but like it has like Victorian vibe cafes. But yeah, just beautiful, beautiful overall. Their architecture, their buildings, clean city. It was very, very nice to see, especially Austria.
Awesome, awesome. Well, glad that you had a good trip. Well deserved for all the work you're doing over here. Much appreciated. So
Of course.
now, time to throw you back into the mix, though, and start getting your reading on the overall market. So
Yeah, let's get into
um,
it.
I know that you're approaching this with some fresh eyes, which can always be helpful sometimes, right? Just kind of get away from the computer for a couple of
Yeah.
days and take a look at things. And we are keeping an eye out on this market here. I might bank a little bit more of this short right now as we get down towards session lows. Certainly time for traders to start protecting it, I would say, down here. But let's talk a little bit about the SPX, and we'll look at the SPY first, Chris. Um, we'd like to take a look at we're doing a macro look from a little bit of a longer time frame, just to get things back up and running here. So with that in mind, Chris, what are you seeing in the SPY on a longer term time frame? Obviously, it's been pretty choppy here. We had that one squeeze. I think you might have already left at that point, but we've been consolidating those gains, but really haven't been able to find much buyers above here. So curious as to your take on what you're seeing in the charts.
Yeah, so before I left, let me get my drawing tools just a second. So before I left, we were pretty much stuck in this overall range right over here. We're kind of moving sideways, trading above and below that 12-period moving average. But then we had that burst higher into new all-time highs and breaking above these recent highs right over here. So that's where we currently stand. The trend is higher, but what I'm seeing on the SPY, which kind of makes like a complete picture when you take the other indices into consideration, particularly the QQQ, we burst higher, we broke above these highs, but momentum is not participating in that. So we do have an uptrend breaking out into all-time highs, but the weekly, which is a pretty strong indicator, the weekly RSI, weekly momentum, is making lower highs as price is making higher highs. So a little bit of a smoke signal developing over there. It doesn't make me automatically want to go short. It just kind of makes me cautious. That's something that I'm paying attention to. Last week, we did have this test above the prior week's high, and this week, right now, actually, we're poking below last week's low. And I have this level marked off here from 779, call it 779.50 down to 772.60 as potentially new resistance forming. And I would say that's new resistance as long as price decisively breaks below the prior week's low and closes below it. So that's something that I'm keeping an eye on, that level from 779.50, 772.60. As far as the downside goes, we do have significant support here from 747, 729. So if we do retrace into this level, that also lines up with that 12-period moving average, I'd be curious to see how price reacts over here. Are we going to base? Are we going to slow down and turn back higher and revisit these highs? Or are we going to base, consolidate, potentially break below it and test the lower support range here from 714 down to about 702.25. So that's what I'm seeing on the SPY. Overall trend, weekly trend, macro trend is higher, but we are seeing momentum waning. We are seeing momentum diverging. So that means that we may potentially see a bit of a pullback developing over here.
All right, so let's take a look then at the Qs next, Chris. Currently down 1.79% on the session, leading the way lower here. Still holding up above that 50-day moving average at the moment, but certainly breaking down, now testing its lows from last week. So what are you seeing in the Qs here right now?
Yeah, I'm pretty much looking at the Qs as the primary driver of the market. It's been the weaker out of all the indices. It's not making new highs like the SPY, like the Dow, like the IWM. I left this on here because before I left, we were looking at this level here from 727.10, 720.65. Price broke above it. It closed above it. I'm going to say it tested above it, rejected, and now it's trading lower. But since we got that close, I'm going to get rid of this level. The reaction that we're seeing, the reaction lower that we're seeing is off of this top range here from 748.65, 738.10. Same thing as the SPY. We didn't make new all-time highs. We are reacting lower from resistance. This trend is still on a macro basis. The trend is still higher, but momentum, just like price, is making lower highs and lower lows. Price is not doing that just yet, but momentum is also respecting resistance. So I'm kind of looking at the Qs right now as there may be some potential resistance forming within this area as well as we break below last week's low. Someplace around, it's going to be very close to that upper level, but from about 734.60 down to about 723. The downside support range that I'm keeping an eye on, which we got a reaction higher off of a few weeks ago, is this range here from 674.15, 653.80. If we do get a deeper pullback developing and we go into this range, same thing like the SPY, I want to see how price reacts over here. Are we going to base? Are we going to slow down and try to move higher? Or are we going to work ourselves lower, potentially breaking below that 653.80 area, testing these recent broken highs around 636.25-ish? right around that range. And if we do get below that, which will take some time to unfold, it's not going to do it in a straight shot. But if we were to get below these recent broken swing highs, there's not much support until we get down into the 585, 555 support range below. So QQQ for me is the weaker out of all the indices.
All right, so we'll move on next to the diamonds then. DIA, of course, this is rolling over. So you got the Qs flagged as a little weaker than the diamonds, huh, Chris? Because I was looking at this morning. I kind of had the diamonds as the weaker of the two myself. But coming into that 20-day moving average. So I'd be curious as to your take on the diamonds here then.
Yeah, just based off of the prior, if I'm looking at the prior maybe like 10 weeks or 5 weeks or so, QQQ failed to make new highs while the SPY, Dow, and the IWM did make new highs. So that's why for me it's stopping at resistance. That's the reason why I'm considering it the weakest. But this has a pretty similar picture as the SPY. It didn't have as sharp of a breakout above its recent highs as the SPY did, but nonetheless, it did break above it. It did close above it. And momentum at the same time, the RSI on a weekly basis, it's not participating in that move, which tells me that it doesn't have momentum on its side. RSI is making lower highs or equal highs as price makes higher highs, which again, it's a smoke signal. It's showing us a negative divergence. We do have some, I do want to see how this week closes, but we do have some resistance that's developing over here above from 546.65, 536.80. And if we continue to see pressure beneath, one second, my mouse, oh, there you go. If we continue to see pressure beneath this range, I see price coming down into this area here from about 522.50, 525, this little weekly base that lines up with the 12-period moving average. And a deeper pullback will likely get us into the 513, 500 support range below. Trend is higher, but we are seeing momentum waning. That's what makes me believe that, hey, we might be due for a pullback over here.
All right, and then let's take a look at the Russell, RTY, or IWM, I should say. Just watching this, sitting right on that 300 psych level there. What's your thoughts on small caps?
Yeah, so Russell, similar picture, made a new high, closed above the prior swing high. Momentum is not participating. Momentum is making lower highs while price is making higher highs, which makes me think that, hey, we might be due for a pullback. The area that I'm watching for a pullback is this first support range here from 294 to 287.85 on a weekly basis. If we did get a break below 287.85, price will likely, we have this lower support range here from 276.65, 270.35, but I'd expect to see some type of support coming in right around these highs here, around 285 as well, if we were to potentially get below 287.85. But what I'd be watching for at support is whether or not price, I'd be wanting to see whether price bases within this range, slows down, and then potentially spikes higher, retesting these recent highs, and then on to new all-time highs. So I want to see what price does at support. We haven't formed it just yet, but we are on the verge. We have an inside bar forming. If we were to break below last week's low, decisively break below it and close below it, that's going to form this new resistance range here, which I have dotted from 305.20 down to about 350. So that's pretty much what I'm seeing on the IWM.
All right, let's move over to a few other items of interest here. First off, we are seeing dealers defending these lows at the moment with the SPX popping back up above that 7,700 level. Holding right around the session lows of 76.93 there. So just keeping an eye out on that backdrop. Also keep an eye out on Virtue Financial, VIRT, some takeover chatter making the rounds on them. So, Chris, let's talk a little bit about yields here. We'll focus primarily on the 10-year at the moment, sitting elevated up above that 470 level. I know you've been bullish on yields in terms of expecting them to push higher. That's certainly been the case, just kind of riding that 20-day moving average at the moment. But coming up to a key area where we saw it top out back at the end of July, right around 475. We're right back here. Not a lot of econ data coming down the road. We do have PMIs at the end of the week, and then PCE next Wednesday, followed, of course, by Jackson Hole, which will have a lot of ears on it. But what's your thoughts here on yields?
Yeah, I mean, we have a pretty constructive chart. Healthy uptrend, but we are within this overall sideways trend, which I'll get into in a moment. But we have a pretty healthy uptrend developing over here, which started around February earlier this year. Higher highs, higher lows, with price forming floors, floor 1, floor 2, floor 3, floor 4, along the way. By floor, I mean support. We do have a layer of support that I believe, I'm not sure if this area was there when we were speaking last a couple weeks ago. It should have been actually from 460 to 450. That's the current support range, followed by the 440, 430 area with another layer just beneath it from, it's a level on level from about 430 down to about 423. The way that I'm looking at this, as long as price momentum is looking healthy, making higher highs and higher lows along with price. So as long as price holds above support, we're likely going to move higher and test this significant area here from 5 down to about 485. And for me, it's what we do within this range. This range has been the ceiling for this overall sideways range that we've been in since about 2023. So I'm sure we're going to see some sort of a reaction, some sort of a pullback developing here at this level. But if we actually do get up into it, because it's never a guarantee that we are going to continue up into it, but if we do, I think that we'll see some type of a pullback because it's such a significant level that hasn't really been tested before. But once we get into it, if we do see that pullback, is that pullback going to encounter buying pressure off of support to potentially break above this $5 level, this the 5-point level? So that's what I'm keeping an eye on. If we do get that break, that's gonna be a pretty significant breakout, because again, we're gonna be breaking out of this multi-year range above the 2023 high, which can potentially open the door for higher rates, which can also potentially pressure the equity indices as well.
Okay, let's take a look at the TLT then. Obviously, the flip side of this. Just kind of curious, Chris, if you're going out long term, which, I think at this point, I mean, I don't even know if a monthly would do us justice. Probably got to go to your yearly chart, basically. Even that's kind of questionable. Is there any levels on your charts that you might have an interest in the TLT? I know it's kind of open-ended given the how it's trading right now, but just kind of curious on that front.
Levels to buy or levels too short?
Levels to buy. Like if you're looking for a big turnaround in bonds at all or anything. Not saying that you have. I'm just kind of curious. Is there anything on your charts that you're seeing in terms of Fibonacci level or anything along those lines that would be something of interest to you?
The TLT chart for me, the absolute low on here on TradingView stops at 80.50, and I believe that's the actual ETF low.
I believe so.
Yeah, actual ETF low. If we do want to run like a Fibonacci extension type of a thing, there's really not many clear swing highs to work with over here. What I would do to see how far it can potentially get down, and this is just an estimate, but so something that I do look at is, and I don't do this often in my own trading, but I'm aware of it. I try to see how usually swings. So I try to see how far a specific swing went up, followed by that pullback, and I estimate the next swing to be pretty much as long as that prior swing. So that's the 100% level. That comes in at around 74. But again, I'm not confidently able to say where price could stop. We do have some Fibonacci extension levels. The first one coming in at 74, second one coming in at around 71. I know this zone here from 66 down to about 62, which is a ways away, is a pretty significant level. I wouldn't be banking on this too much. What I'd like to see on these bigger charts is I'm of the belief that these swings, these trends pretty much end when the market kind of comes into balance. And balance for me is like price bar overlap. It could be like 1 or 2 or 3 bars kind of trading within one another and then potentially breaking above the prior bar's high. So that's what I'd be watching for. Instead of watching for these Fibonacci levels, I'd be watching for price on a weekly chart or on a monthly chart to slow down, kind of consolidate and trade within one another, and then potentially break above the highs. And you're not seeing that on the monthly chart. You're not really seeing that forming right now. We are seeing this bar here, which is kind of forming a doji on a monthly basis. So next month, I'd like to see what price does relative to this bar and whether or not we're able to break above that high and kind of form a balance area over here. That's pretty much what I'd be watching for. And I'd be watching for this 80-50. I think that 80-50 would be a key area. But below that, it's anybody's guess, honestly. I'd be looking for the market to come into balance, consolidate, and then potentially move higher from there.
All right, Chris, let's talk a little bit about the dollar. You are able to pull up the UUP, I assume?
Yeah, I got
Yeah,
the
so
UUP.
we'll take a look at it from that perspective. What are you seeing here in the dollar playing out? Obviously, it's been slipping lower as of late, despite yields going higher, so that's always of intrigue, but just kind of curious as to your thoughts on the greenback.
Yeah, so I see a pretty healthy uptrend over here as well. Pretty healthy uptrend since about April 2026. We did hit this key area of resistance here at 28.65, 28.50. I remember saying a couple weeks ago before I left that if we were to break above this 28.65, it's going to open the door for these higher areas. 29.40, 29.10 being the first area, followed by the 29.90, 29.65 range. We traded deep within this range, but that following week just kind of tested above it, fell back below, and we are now testing or kind of forming a base above this first support range here at 28 to 27.85. There's another layer below from 27.75, 27.63. What I'd like to see here, as this chart stands at the moment, for me, if we were to get a break above this prior pivot, last week's high at 28.20, a decisive break above it, that tells me that, hey, some buying pressure is coming in above support, even though we didn't quite fall into that support range. It will tell me that we are seeing some buying pressure coming in above support, breaking above 28.20, opening the door for another test of this 28.65, 28.50 range. And from there, if we were to break above it, that's going to open the door, like I mentioned a little while ago, into the 29.50, 29.10 support range. So I see a pretty healthy uptrend over here, and this move that we're seeing lower at this point is just a pullback, just a retracement within the context of that trend.
All right. Next up, let's take a look at gold. We'll pull up the GLD. It's been edging higher here. It's flattened out over the last week or so, but looking healthier than it has been, that's for sure.
For sure.
Gold turned the corner in your eyes.
We're going to have to see how price reacts around these levels. Let me quickly go out to the monthly time frame. So the way that I'm looking at it, this trend that this recent downtrend that we've been seeing on the monthly time frame, it's a pullback at the moment. It's a pullback within the context of this monthly uptrend. Now, if we zoom into this area on a weekly time frame, it gets a little noisy. It gets a little sideways. So what I'd like to see on GLD, so before I left, we were looking at this area here, and this is a pretty good example. It took a few weeks to kind of form and resolve itself, but this is the type of formation that I like to see at support. I like to see price kind of slowing down and then kind of moving sideways, consolidating, and then potentially breaking up above that range, showing that buying pressure is coming in. And it could take anywhere from 2 to 3 bars approximately to do that. It took a little while longer, but this is the type of formation that I'm always looking at, whether it's resistance or whether it's support. But that aside, we consolidated within that range, shot higher from 374 to 360. We're now testing this range here. We tested above it, rejected, and we're pretty much doing the same thing this week from 402 down to about 395.80. We're above that 12 period moving average. For me, I'd like to see a decisive break above this 421.80, 413.80 area to say that we've turned the corner on gold. For now, we have a higher high. I'd like to see price make a bit of a lower low and then another higher high to get that rhythm of just to get that trend showing higher highs and higher lows. So that's pretty much what I'm paying attention to on gold. We did run quite a bit. We can get a bit of a pullback. We can consolidate over here. But the level that I'm eyeing is this 421.80, 413.80 area, and I'd like to see a lower high form, or lower high form followed by a higher high to say that, hey, this is back trending higher on a weekly basis.
All right, moving in on the same light there, silver, SLV. We'll take a look at that ETF. Obviously, very similar chart, and obviously an inverse chart naturally to the Dixie too, right? So.
Yeah, so similar chart as a GLD. GLD is looking a little stronger than SLV, a little stronger than silver. We reacted higher off of this range from 53, support range from 53 down to about 51.15, and are now seeing a little bit of selling pressure coming in here at 64.70 down to about 61.30. So current ceiling is the 64.70, 61.30. Current floor is the 53.51. We're in this overall sideways range. Just like gold, I'd like to see price break above 64.70. And then this is a key level here, the 70.75, 68.35. If we're able to, within the next few weeks, kind of make our way up there, form a lower high followed by a higher high, that's going to turn this weekly trend higher, because right now we're kind of moving within this overall sideways range between resistance and support.
Tell me about Bitcoin. What do you think here? I did take a long yesterday, and Ethereum it is up slightly on the day. We have a meeting between the Trump administration and a number of crypto officials tomorrow. Number of prediction markets too, for that matter. But what's your thoughts? We'll take a look at the BITO, or what's your preferred Bitcoin read?
I have the spot pulled up, BTC USD. So
I was sure if you had the spot on those charts there. So okay, perfect. So what's your thoughts on Bitcoin?
So,
are you interested at all?
I was looking at this earlier prior to getting on this session, and it's so a couple things. First of all, I do like that momentum is making higher. It's like kind of bottoming out, and it's attempting to make higher highs over here. So RSI on a weekly basis, we are beginning to see it kind of putting in a floor and beginning to see a minor high developing over there. We still have to get through this resistance range here. So we have resistance from 67.250 to 63.250, call it. We're consolidating within this range, so we're definitely going to get a move. It's similar to gold, not as clear cut, but we're kind of slowing down base and consolidating within this range. Either this range holds, and we're going to test lower into the 57.275, 52.550 range, or we're going to chew deeper into a break above that 67.250 and head higher into the 78.125, 73.565 range. The way that I would play it myself, I would wait for a break above 67,250 to confirm that this level is breaking. We're seeing buying pressure developing and getting rid of the sellers within that range, opening the door for this higher level, or taking out these recent lows for a test back down into the 57,275, 52,550 range. So for me, it's all about what we do within this resistance range right over here.
All right. So, any other asset classes that you wanted to highlight before we start breaking down some of the sectors here, Chris?
I think we covered most of them. I was talking about natural gas, UNG, which has been a pretty tough trade over the last few months. But what I was seeing over the last few weeks was on a daily basis, UNG. You're not quite seeing it on the weekly time frame just yet. But natural gas, we do have momentum making higher highs and higher lows. This trend is still lower overall, but we did form a new support range here from 980 to 970, reacted lower off of resistance, and yesterday we kind of based within that range and today gapped higher above it. So something that I'm paying attention to, I think in order to get out of this, if I go to a weekly chart, you could see it a little bit cleaner. But for this to reverse trend and potentially begin moving higher, I'd like to see a break above the 1080 range. So as long as we're holding above the 980, 970 support range below, I think we're going to move higher, test the 1080 to 1040, this wider support range here. Break above it will likely get us into the 1210, 1150 range. So it's interesting. There's some buying pressure coming in over here. I want to see how far it takes us if we're able to break above some of these prior highs in order to reverse this recent downtrend that we've been in both on the weekly and daily time frames.
All right, Chris. So let's take a look. You did have a question there in the room from Phil asking about the chart. So overall, he's wondering, do you see that as a bearish chart?
Yeah, definitely. I mean, just talking about these support ranges, that's what I was discussing, the current ceilings, but definitely this trend on a weekly basis, on a monthly basis, this trend is down. We'd have to see some higher highs and lower, higher lows and higher highs developing before we get. I'm not bullish on it long term. For me, a break above 67,250 would just open the door for a test of this range over here. But this is a pretty significant swing high, which has been controlling this trend lower. So we need to at least get above this 83,260 range for this overall monthly, weekly downtrend to potentially terminate and flip higher. At the moment, it's looking pretty bearish to me.
Yeah.
That doesn't mean you can't, even within that bearish looking chart, it doesn't mean that you can't travel from support to resistance. Price is still going to ping pong. But I'd expect within that the context of a downtrend for those bounces higher to be short-lived.
Yeah, and with that in mind too, with midterms coming up, Bitcoin will certainly be a centerpiece for people to keep an eye out on, especially if there's concerns that Democrats take the House and will look to crack down on some of the Bitcoin initiatives under Trump. So, moving on, Chris, let's start. We'll break down the different sectors real quick, go through those. I'm going to go from cheapest to most expensive. So, what do you think from a forward earnings standpoint is the cheapest sector, Chris?
Cheapest sector? What do you mean cheapest sector? As far as like
forward PE basis, what do you think's the least expensive group right here of the 11 sectors?
I mean, I'll say this from a forward PE perspective. I haven't done the numbers. I can't really speak on that, but I do like the way the XLE is looking.
And
I think that
one.
Yeah, I think that this has the potential to move a lot higher than where we're at right now, especially with some of the geopolitical tensions developing. And if we do see a potential pullback in equities, this can really get going, I think.
Yeah, that was kind of my point. Like a little surprising that even with the pretty good run up as of late that this still remains the cheapest sector there, trading at about 13.2 times forward PE. So looks like a nice setup to me too. Is there any thing in particular that you'd be looking at the XLE? I know you look at Schlumberger a lot, which is a big holding in the OIH. So any individual names that you're looking at in the XLE?
Any individual names? Yeah, I mean, I was looking at the SLB. I think I commented on that this morning on the SLB. Let me see. I don't have the levels marked up here. I thought I did, but I don't have the levels marked up here. But it's a pretty constructive looking chart. We're making higher highs, higher lows with support forming along the way. We have a level of support here on the SLB from 52 down to about 51.60, followed by another level just below it from 51 down to about 50.25. I pretty much pay attention to 2 levels below, 2 levels above. Price broke above, it's pretty similar looking to the XLE. Price broke above this recent swing high over here, tested and rejected above it, and we may see a deeper pullback into support, and I'll tell you why I think that's going to happen. But as far as resistance goes, we have this range here from about 56.85, 57.15. A decisive break above that is going to lead to a potential test of these recent highs over here, followed by, I think it should be all-time highs on here. No, it's not all-time highs. Let me just mark this up so we have it over here. Let me go to a weekly. Yeah, so a break above this, a decisive break above the 56.85, 56.20 range should get us into the 62.10, 60.15 resistance range above. I'm sure we'll slow down here at these highs as well, but the next significant level of support comes in at around 62.15, 60.15. One comment I do want to make though on the XLE, taking a look at it on a weekly basis. So I look at all these trends. I look at price action as kind of ping-ponging. Price ping-pongs up, ping-pongs down, and whenever you're in an uptrend, those ping-pongs lower are shorter lived versus the moves higher. That's what creates these higher highs and higher lows. This is an all-time high on the XLE. Price is right now, it's kind of testing above it. We're going to see if it actually closes above it this week. We may very well see a test and reject. We may see a potential pullback because taking a look at the Bollinger Bands on a weekly basis, we are quite extended outside the weekly Bollinger Bands, which is a pretty, which usually tells me that, hey, we may potentially revert lower before we move higher again. So if we do see that, I'd expect some of these names like the SLB, CVX, XOM to all pull back to their respective support ranges as well. So something that I'm keeping an eye on. Doesn't automatically mean go short, but I just watch for price action to potentially tell me that, hey, we might be pulling back since we're poking outside of these bands.
All right, Chris. Next up, we got the XLB, which is sitting there trading at. We got the XLB sitting there trading at 51.96, holding on to the 20-day moving average. It has been pulling back recently here. You got any thoughts on the XLB chart?
Yeah, it's pretty choppy. I mean, the overall trend is higher. We've been in an uptrend since about November 2025, but recently, since about earlier this year, since about February, we've been kind of chopping around, moving within this sideways range. The current ceiling that I'm seeing is a 53.75, 52.50 range, which was on here the last time we spoke as well, followed by that current floor from 50.30 to 48.90. What I'd like to see for a continuation higher is price to decisively break above that 53.75 and potentially close above it and potentially put in that leg higher. But until we do that, we're pretty much stuck in a range here between resistance and the downside support range.
All right. Next up, this is, hold on a second, sorry. This is trading at 14.7 times. It's been one of the stronger groups out there, but the financials, XLF, they're stepping its way up, but it is looking a little tired as of late, but still seems to be holding on to that trend at the moment. Chris, you got any thoughts? You think that this is looking a little toppy to you, or some further upside?
Yeah, I do actually. So pretty healthy uptrend. We're forming support as we move higher. Pretty healthy uptrend. 56.30, 55.50, 53.75, 53.20 are the two support ranges that I'm keeping an eye on. Whenever you look at this weekly chart here, we are kind of forming a balance area here. This week's candle has kind of been trading within the prior 2 weeks range, which tells me that, hey, this trend may be exhausted. We may be due for a pullback. And I believe I talked about this a few sessions ago. If you take a look at the monthly time frame, we do have a negative divergence developing over here, which it's not quite as clear on the weekly chart. But price is making higher highs, breaking above this swing high, but momentum is not really making higher highs. It's testing resistance. So that kind of tells me that, hey, we may be due for, momentum is slowing down, the trend is higher, but we may be due for a pullback over here. And as far as a pullback, I'll be watching the 56.30, 55.50 range first, followed by the 53.75, 53.20 area.
All right. How about the utilities, XLU?
Utilities pretty similar looking as the XLB. We're stuck in a range as well, trending higher, but as of late, probably about October 2025, February maybe, we've been moving within this sideways range over here. Current floor is a 43.35, 42.50 support range. A break below that would likely test a 41.25, 40.15 support range. The current ceiling, and I believe it's the only ceiling, the 47.70, 46.35 range. If we were to begin moving higher, I'd like to see a break above this week's high next week, or just actually a move above last week's high for a potential run into resistance from above 44.40. If we were to decisively break above last week's high, we'll likely begin moving towards this 47.70, 46.35 resistance range. And for me, I'd like to see a decisive break above 47.70 in order to continue this weekly and monthly uptrend that we've been in. Otherwise, we're pretty much stuck in a range.
All right. Healthcare, obviously keeping an eye out on this. It's breaking out here at the moment.
Yeah.
It's trading at about 18 times 4P, so not necessarily cheap. Certainly seems to be some defensive buying going on in the group here, but this has been on a pretty strong upward trend since May.
Yeah, it has. I mean, the chart looks good. Pretty healthy uptrend, higher highs, higher lows. Momentum is confirming price action. It's also making higher highs, higher lows as price breaks out into all-time highs. We may potentially at some point get a pullback, which all trends get a pullback, either up or down. The first support range that I'll be eyeing is this area here. It's a wide area from 162.50 down to about 157.25. The second layer of support comes in from 153.70 down to about 148.80. But yeah, I'm seeing a pretty clear uptrend over here. Momentum as well, making higher highs, higher lows. This support range here formed right on top of these highs, which is it's always good to see. Whenever you break through significant highs or lows, I'm always looking for areas of support or areas of resistance forming at those areas, which tells me that, hey, there was enough buying pressure to overcome the sellers and form new support along the way, and vice versa with resistance.
All right, taking a look at the consumer defensives, XLY here. Obviously, those higher yields aren't going to help it out too much. Sitting right on the 200-day moving average, Chris. Which way are you leaning on consumer discretionary, please?
Yeah, so sideways range, it's pretty messy. We are testing this upper area of resistance. I had this level marked off from last time, 119.50, 117.15. We tested above it, rejected, formed an inside bar last week, and we're now breaking below that inside bar low. Um, as long as we hold above or below this 119.50, 117.15 range, I'd expect price to drift lower, probably into, there's probably some support that you'll find around these broken lows at around 113.75, 114. But below there, below this moving average, I'd expect price to retest this 108.15, 105.20 support range below, followed by 101.20, 98.35. Not a clear trend. We're just testing the upper end of this overall sideways range that we've been in.
All right. Moving up to cyclicals, or to staples, I should say, the XLP. Pretty steady chart here, certainly not much volatility, and I mean, staples usually is in a volatile area to begin with, I suppose, but what's your thoughts on the XLP here?
Yeah, it's pretty messy, but we are making consecutive higher lows over here. Price keeps kind of coming back, but it's consecutively making higher lows and higher highs as well. Let me take that box out of there. We do have support here from 85.15, 82.80. As long as we hold above that, I'd expect price to move higher, test the 90.15, 87.90 range. A break above 90.15, I believe, should be all-time highs. Yeah, so it should be a breakout into all-time highs with no price resistance above it. As long as we break above that 90, decisively break and close above that 90.15 figure.
All right. So tech would be up next here, Chris. It's trading at about 25.7 times. Not the most expensive, surprisingly enough. I mean, well, real estate generally usually is, but there's a few others that are going to be up above this still. Looking a little toppy here in the XLK at the moment.
Yeah, very similar picture as a QQQ. As we know, XLK has been a big driver of the indices, particularly of the QQQ. So I had this level marked off last time from 186.40, 182.65. We broke above that a couple weeks ago, so let me remove that. We broke above that and now tested the upper range from 194.30, 190.35, and are now kind of attempting to break below last week's low. If we hold below this range, I'd expect price to test this base over here from about 177 to about 176. This area right over here, 177 down to about 176.50. A deeper pullback will get us into the 161.85, 156.15 range. This trend is higher, but it's getting tired. We're forming resistance. We're making new lows out of resistance, and now price is stopping at that resistance area, which pretty much was the origin of that low that formed a few weeks ago. So that's pretty much what I'm keeping an eye on. And momentum also, it's making lower highs, lower lows, and it's now, as we moved higher over the past few weeks, it's testing its resistance range as well. So I'd want to see price decisively get above 194.30 in order to continue this recent uptrend that we've been in, which will most likely break the QQQs out of its similar looking formation as well.
All right, then, Chris, we got the telecommunications, primarily Meta and Google, of course, the XLC. Tight sideways chop really over the last 2 weeks or so.
Yeah, it is sideways range. We're making equal highs, kind of slightly lower high last week. Tested this range here from 113 to about 113 down to about 111.40. Tested above it, rejected twice, didn't close above it, and are now kind of forming an inside bar. We're trading within last week's range, so keeping an eye on that. If we do see, if price holds beneath this range, the 113 down to about 111.50 range, will likely drift lower and retest this 107.50, 105.50 range. We've been here twice, tested it twice, so a break below the 105.50 is going to open the door for price to begin moving lower into the 101.50, 99.60 area below.
All right, and then industrials here, trading at about 29.6 times. Certainly a name that we're going to want to keep an eye out on if this econ data starts to slip a little bit. And looks like the XLI is starting to slip a little bit. Do you see this as maybe one of the centerpieces of areas that could get hit the hardest if we got a rollback?
I think it can. Technically, we've been trending higher. We tested above this recent swing high, but haven't really been able to close above it. Maybe we were right on the verge of it on last week's candle. But we have two layers of downside support here, which may potentially bring buyers back in if price gets there, tests it, and then we can potentially reverse higher. Just looking at the chart, we are in an uptrend, but momentum also on this, we're diverting over here. We have a negative divergence developing. Price made new highs. Let me draw this out over here. So price made new highs on this bar over here, but momentum failed to make new highs, which tells me that we may be due for a deeper pullback, and I'll be eyeing these support ranges: 181.20, 117.20, down to about 173.25, 168. That's pretty much what I'm seeing on there. And we need to decisively break above 188.50 with momentum also participating in order to continue this overall trend higher.
All right, and just if you're curious, top holdings in the XLI, Caterpillar is the top one. That's obviously been a weaker name. General Electric is number 2 at about 6.5 times. Still a good looking chart there. RTX, which we have that long in, looking decent at least on that front. GE Veranova, a big one. Boeing, BA, comes in here. Union Pacific, UNP, another name. Eaton Corp, ETN, also in there. And you got Uber as one of the top industrials. And then Deere, which we'll be reporting later on this week, and certainly a name to keep an eye out on. So just a few names in that XLI. And then finally, Chris, the most expensive sector out there, well, that would be real estate. We could go looking at the XLRE or the IYR, whatever is your preference. This is another one that's been trading in a sideways direction. Trades at about 30.7 times forward PE. Any thoughts on real estate here?
Yeah, it's messy, but same thing. We're kind of making higher highs, higher lows over here. A couple weeks ago, we broke above these prior highs. This prior high here from dating as far back as August 2022. And we are now pulling back into the 44.75, 44 support range, another layer below it from 43.50 down to about 43.10. I'd like to see what we do over here at support. If price holds above it and breaks above last week's high at 45.30, that's gonna likely get us back into the prior high. A test. It's likely going to retest a prior high here at around 46.50. And a decisive break above 46.50, that's going to open the door for price to begin moving toward this upper area here from 50 down to about 48.65. So we do have a pretty healthy uptrend developing over here, or going over here. We are seeing a bit of a pullback developing. Momentum is also slowing down. So I'd like to see what we do at this support range. If we fail to get above these highs, we're likely going to drift lower into the 43.50, 43.10 range. For me, I'd consider this uptrend broken if we trade below, decisively break below the 43.10 area, swing low over here.
All right, so that will do it for this session today, Chris. Anything, any parting shots before we let you get going here?
No, I'm just keeping an eye on the indices pretty much. QQQ, like I mentioned, is the weaker of them all. And the SPY, Dow, and IWM, they're potentially forming resistance areas with momentum diverging on a weekly time frame. So I'd like to see what price does if we do pull back into support, if we're going to have enough buying pressure within those areas to potentially send prices higher. At the same time, I'm paying attention to rates, the TNX, the 10-year rate, because I think that the higher this starts going, it can potentially pressure indices as well. So I'm just keeping an eye on this overall macro weekly and monthly trends on the yields. So and the XLE, USO, XLE, the energy names, I'm keeping an eye on that as well. They're pretty strong. Like I mentioned earlier, they may be due to a pullback over here since we ran up quite a bit. And for me, any pullbacks will likely be buying opportunities until proven wrong.
All right, sounds good. Well, Chris, good to have you back. Definitely appreciate your insight into the charts. We'll be posting some of this in a little bit here. If anybody's got any questions, certainly feel free to fill in. But we'll be back in on the normal Tuesday, Thursday rotation here. Earnings obviously a little bit slower, but maybe we'll break down some of these sector ETFs, Chris, or something. We'll chat about that offline. But
Yeah, for sure.
if anybody had anything, of course, that they wanted us to address, by all means, we'd be happy to do that too. So, Chris, I'll let you get going here, but thank you so much for jumping on and giving us all that insight into the charts.
Sounds good. Thank you, Gavin. Thanks, guys.